Hey guys, welcome back to the channel. I hope everyone is doing great. Hope everyone had time to spend with their family and their other loved ones. So let's get into it. I'm still on the lookout for a good hedge to some of my tech-heavy positions, such as Triple QY and Tesla. So I've been looking through like a few ETFs, and I was looking at XOMO. I guess I'll pronounce it SHOMO. I was thinking just in general, is ExxonMobil or Showmo like a good deal? Because it's a little tricky. I'm looking for something that'll give me some protection against like some of the volatility that might be coming up. Because right now, like the markets are doing well, but it won't, I think it'll probably fizzle out towards maybe around mid-February or so. So I was checking out how Shomo would correlate to the triple QY. So as you can see, it's kind of like up and down. So when I bought a little, like kind of like near the bottom over here, was like around like negative 0.76, and now it's actually like flipped the other way. It's like now it's like positively correlated to the triple QY. So my timing, uh, well, I don't know if it's the best yet. Like you can't tell until after the fact. Because I thought like it's dipped like it's definitely in the bottom end of the range, even though it's been trading only for a short while. So I thought let me take a small shot. So like when you look at like normal charts, it's hard to tell like whether something is really cheap or not. Like I think sometimes when you're evaluating trades or investments, I think it's good to look at them like in comparison like to each other. That's why it's always good to kind of have like a correlation tool. Or the other thing that you can do is like for example like Shomo. I guess like maybe look at the actual stock itself kind of as just like a small clue as to whether it's really cheap or not. So it's trading close to like the bottom of like the 52-week range. So ideally, um, since oil in general has been kind of sliding down a little bit, because hopefully there's more good news in terms of like the Middle East. Maybe we'll have like a brief period of peace. But then like I guess like hopefully I time like the pricing so that like if oil goes down a little bit more, I won't get too hurt. But on the flip side, like let's say, God forbid, like there's like something else that happens again, like another war or like some debt crisis or whatever. Oil might be a beneficiary, just because it's very important strategic and economic tool. So I think at these prices, I think it's worth like grabbing like a small piece. And then the second thing, like kind of like another bonus, uh, I know like this isn't like a popular trading technique. This is uh, like something that older trader, older traders used to teach me, and is to kind of look at like the difference between like two investments, just sort of like to do like a relative like value thing, and also there's like different ways that you can to do this. I don't like the way that Thinkorswim or like Tasty Trade, like the way that when they do their charts, like it when you're trying to compare like two ticker symbols at the same time, they use like the minus. Um, there's I mean, there's nothing wrong with it, but it's just like not my preference. I guess I like seeing things uh like divided. Like for example, I would like in TradingView, you can do triple QY divided by Shomo. It's just a different way to look at things. I don't think there's a wrong way to do it, but these are the tools that I have, so I'm just gonna go with what I have. So if you take a look at like the kind of like the difference between these two ETFs, I want to see if I can time it so that eventually at some point I might want to sell off some triple QY for Shomo, and then like when it's kind of like near the bottom, then buy back like the triple QY and then like sell off the SHOMO. This is how like I would trade it. Like if it's like because if you notice, it's sort of in a range. So like the way to do it is to kind of do like a offset type of trade. Like I hope this makes sense. If it's too complicated for you guys, like don't worry about it. I think this is just like something helpful for like it's just another way to trade. So and it's kind of like a lost technique. So I thought it'd be a good way to kind of bring it back to like the masses. Um, so anyway, in terms of fundamentals, the way I like to look at things is well, how do you determine if something is cheap or not? A lot of the focus has been on like these new economy and tech stocks, and meanwhile, like these old economy, like they're not completely dead. Like oil is still a really useful commodity, and then also the other thing is that ExxonMobil, they're entering like into like the lithium business too. So this could be like a kind of like a good way to kind of play both sides until I guess at some point if Tesla takes off. Ironically enough, ExxonMobil might benefit a little bit just because of like the lithium play. So I guess like the way to look at it is like SHOMO is the reality that's now, and Tesla is kind of like the fantasy or like what we hope to have in the future. So it's not a bad way to look at things, in my opinion. So it's something that you can kind of consider for your own trading as well or investing too. Um, and then the only bad thing I see about this is like since SHOMO is relatively new, I think the yield might compress a little bit more, especially during non-earnings months. Um, but the good thing about SHOMO is because it's related to like a strategic asset. So anytime there's like a some bad news, SHOMO might benefit. So that might help offset some of the losses in the other part of my portfolio. So that's just something to consider. So I think it could be good for some of the time. I still think I need other income-based investments. So another thing that still have is like treasury money market accounts, maybe a few dividend aristocrats here and there too. Um, and then the risks are like if things get really bad, Shomo might not even help in like the portfolio just because like if there's like something really bad that happens, everybody's just gonna go to cash and then they'll sell off like everything indiscriminately. So hopefully there's no other like market disaster that'll happen, but it pays to be prepared. So I once again I just want to thank everyone that took the time to like watch this video, and then also like the people like especially like new subscribers. Thank you very much. I hope to keep the momentum going into like the holiday season and beyond. So thank you and have a great day. Bye now.